What is good, you guys? Hope you guys are having a great day so far. I just wanted to come up here and break down a pair, how I would personally break it down, and what I see, and how I would analyze it. It's pretty simple. It's nothing nothing crazy. So first of all, what we're gonna do is obviously I'm gonna break down DJ because it's one of the most volatile pair, and I've been trading this pair for the past 3 or 4 years. So that's why I like to just break down DJ. Or I can randomly choose another pair, but it's gonna be the same thing. So first of all, what I'm gonna do is I'm gonna come to the monthly. So monthly, we're seeing prices making higher highs. So what I like to do with my pairs is I like to choose and mark the strongest level of support all the way to the weakest, and as well as I count my wicks as support as well. So I'm gonna show it to you guys how it works. So for example, here we're looking at the monthly. So we're gonna mark this right here. Let me just extend this, and I mark my strongest level of support with a um, red color, a very sharp red color, and so that's my support. And then as well as there's a resistance. So with resistance, I either do this, or since we're breaking above that resistance, the next resistance is gonna be this wick right here. So 163,910 is gonna be the next resistance, which we most likely might see this level, my 16900, in the next few days or in the next week or so. And once we break this higher high, we could possibly see 168,500 or 167,500. So that's gonna be my next strongest level of resistance. So coming down to weekly, same thing. My this is gonna be the strongest level of resistance. Daily right here, I can mark it down, or I can just count this as my resistance, which is the highest wick of the month that we're gonna face. So coming down to the 4 hours. So 4 hours, since we're scalpers, I like to really have my 4 hours support and resistance in mind, because we're not day traders, we're scalpers. So with scalpers, you really want to have your 4 hours resistance as well in mind, because sometimes what price tends to do is it tends to either range or have 4 hour fake out. So that's why that 4 hour support and resistance matters. So in this case, what we were gonna do is, since we already passed this resistance, my next resistance on the 4 hour will be this wick right here, which is 163,585. So this is gonna be my next level of support, or this right here, which is 163,450. But I'm not gonna really care about that one. I'm just gonna focus on this one right here, 163,585. Coming down to the hourly, I don't really look at the hourly like that, but sometimes it is important to look at the hourly because it gives you more confluences. So in this case, what I'm going to do is mark my little hourly resistance. With 30 minutes, 15 minutes, I like to color them green because they're not as strong as the daily or the 4 hour resistance or support. Same thing with 30 minutes. 30 minutes more of a confluence time frame, and I really like to have it in mind. In this case, we're facing this little wick as well, but since it's the 30 minute, it's really not that important. With normal market condition, with normal volatile and momentum, we should be able to break all these wicks. And in this case, what I'm gonna do is on the 15 minute, I'm gonna throw down my quarter point. I don't really use much indicators anymore like I used to. I just like to make it as simple as possible, really use the ones that I really need. So which is the quarter point, support, resistance, and sometimes EMAs and SMAs, and as well as trend lines too. So in this case, I'm gonna throw on a little little trend line on the hourly. So what I like to do with my trend line, I want to make it as tight as possible. So I can either run it from here all the way here, and then I can run another one from the highest of the highs all the way through here. So once this trend line is broken, I can enter buys, and then my TP1 will be 10 pips. So for example, my entry would be 400, TP1 will be 10 pips, and stop loss 7.5 pips. And then it goes on all the way to 50 pips. So let's see if this trade activates. And then on the 15-minute, same thing. I just fix my little trend lines and then go over it as well. So in this case, on the 15-minute, what I like to do is I like to see when my pair is doing. I'm gonna see candles on the wick form. So in this case, we broke the wick, which was the high here. Now we're facing this right here. So as soon as we break the trend line, we could be aggressive and even enter here, or let me see, we could be aggressive and enter at 350. I might as well just enter at 350. No, 370. Let me see, 350. Yeah, 350 is very aggressive, and we already missed that move. So 375 looks good. So let's see if this trade is gonna be activated. So once this trend line is broken, most likely price is gonna come up and disrespect this higher high, and then go up to 163,500. So in this case, I'm seeing that okay, everything is going perfect. The only three things that I like to go over is it's really not. I don't really like to make it very important. I just like to go over it just like that 5% confluence. It's gonna be gold. So GJ, I don't know if you guys know this, GJ is very correlated with gold and GU. So if GU is bullish, GJ will be bullish too. So in this case, GU is bullish and GJ will be bullish as well. So GJ is bullish as well. Now let's go to gold and see gold. So if GJ is bullish, gold is going to be bearish most likely. And that's what happens 80%, 75% of the times. So in this case, what we're seeing is gold is making a higher wick, and now most likely it's going to come down. But what I don't like here is how gold made a lower low, and now it's rejecting this right here. So in this case, I still don't care about this, but it's just I just wanted to put this out there to open you guys' eyes. It's really, I don't really count this as confluences. It's more of a correlation. But as we're coming up here, we're gonna be activated, and once we activate it, let's see where our 10 pips is gonna be. So 10 pips is gonna be 475. That'll be our TP1, and then TP2 is 25 pips. So 625, and that's about it, guys. It's really not that complicated. And what I do, especially what I trade, is London. So if London opens, I don't really enter the first 30 minutes because it's liquidity. So if we're bullish before London open, I don't want to enter right after unless I see more confirmation, obviously. Then I'm going to enter. But since you guys are beginners, I don't recommend it. So if we're bullish, we're very bullish London open with the normal market condition. So if we're bullish pre-London, as soon as London opens, what price tends to do is it drops 10 to 15 pips. So what it would do is it would open and then drop. So that's why you don't want to trade the London open. You want to give it at least 5 to 10 minutes to see where price is going. So that's why entering GJ pre-London 10 minutes, 20 minutes before London open is kind of risky. So, and if you guys are doing it, please make sure to manage risk. And also what I don't like about payer is Asian session. Asian session is more of a ranging session with payer. What it does is it really just ranges wall of fake. What it would do is it would basically range for the whole session, making higher highs, lower lows. And what London is doing, London is either making the higher of the day or the lowest of the day. And then in New York, we kind of just correct the move as well, if that makes sense. So that's what GJ is doing. So in this case, what the way I broke down GJ was first from the high time frame to lower time frame, seeing my support and resistance. After our support and resistance, I went over my EMA, SMA, then I went to my other pairs just to see what we could possibly see from GJ. But like I said, even if gold was bullish, and I see that, okay, I'm seeing multiple confluences here, I would still enter my trade. I'm not gonna really care about other pairs because those are other pairs, but they're still correlated with GJ. That makes sense. But do not go ahead and gamble just because gold was bearish and you come over here and gamble on GJ because GJ is gonna be bullish. It doesn't work. So and then my EMA SMAs, I don't really go over it like that because I have it there, but it's really whatever. I'm neutral about my email, SMAs, conditions. This is what you can expect from GJ. It's one of the easiest pair to trade, but as well as one of the most volatile, one of the most manipulated pair as well. So if you do not know what you're doing, you can really blow accounts with this pair. Would I recommend it to you guys or to beginners or intermediate? 100%. It's one of the problem with this pair is if you do not know what you're doing, you can really apology. So what I recommend is first really get educated, and then once you're educated enough, then you can go ahead. And once you get a hang of this pair, it's very easy. What I recommend to you guys is to never backtest. Yeah, backtest only your indicators, but do not backtest your strategy. What I recommend for your strategy is to only look at live market with your strategy and see if it works for you. Backtesting is, yeah, it's good for beginners, but if you're not a beginner, do not backtest at all. Look at your strategy, whatever you're coming up with in live market, and see if it works in live market. If it works in live market, it should work for you. With backtesting, it's more of I would say a fake. It's more of a game, you know what I mean? But with live market, it's live market and price is moving realistically. Other than that, guys, I hope you guys enjoyed this video and learned something from this video. And if you did, and if you guys did learn anything from this video, you guys know what to do. Make sure to like, subscribe, comment down below. I'm gonna be coming out with some bangers, and we're gonna really slaughter YouTube in the next few months. Thank you guys so much for the support. I'm out of here.